My name is Phil Helton with the Helton Home Team and Keller Williams Frisco.
And I'm James Hoglen. I'm with Benchmark Mortgage. Today we're going to talk to you about Mortgage 101, the steps and process that you'll go through and experience when you're getting ready to buy a home.
So as a home buyer or a first-time home buyer, there's a lot of steps, I think, in obtaining a mortgage. Can you go through some of those?
Absolutely. There are a ton of steps. Number one thing I recommend to everybody is as soon as you decide that you might be ready to buy a home, go ahead and find a loan officer and apply right away. That way we'll discuss your budget, your goals, and what you're trying to achieve, and we'll help architect that program for you. Also, we'll make sure your expectations are set correctly for how much you can afford and the payment you're comfortable with making. So the process, it's not as daunting as a lot of people think. But you're going to start off and you're going to fill out what somebody might call a 1003. That's a universal residential loan application. And with that, we're going to gather some documentation from you. We're going to get your pay stubs that cover the last 30 days worth of pay. If you're self-employed, we're going to ask for your tax returns for the last 2 years. We're going to ask for your W-2s or your 1099s for the last 2 years too. And we're also going to collect your bank statements and your asset statements for the last 60 days or 2 months. A copy of your driver's license, your social security card, any other pertinent information that we might see on the application that makes us look for. Child support, a divorce decree. It's a little bit different for everybody, but those are the core items that we're really going to look for to help determine your eligibility and what you qualify for when you're buying a home.
So how does my credit score come into play?
Your credit score is, obviously, it's one of the major components on this. A lot of people think that they know what their credit score is because they use online services like Credit Karma or something like that. Free services out there. When in actuality, what we use, it's a different scoring model that's set forth by the credit repositories, and it's a totally different model. So that's another great reason for talking to us early so we can help manage that expectation. But your credit is crucial.
Okay. How long does this process usually take?
It can take as little as a day. It can take as little as 3 or 4 weeks, up to 6 months. But once we find a house and we get it under contract with you, we really typically tell everybody to expect about 30 days.
So James, I've heard two terms out there. One is pre-approval and one's pre-qualification. Can you explain the difference?
Absolutely. They're almost night and day on the difference of them. A pre-qualification, I don't want to say it's not worth anything. It really helps you kind of get an idea of where you're going to go. But just realize, to get a pre-qualification, you can call me, and in a matter of a few minutes, I can ask you a few questions and tell you what you pre-qualify for. When you are getting pre-approved, it's a little bit more in-depth of a process. I'm going to collect your income, your asset documents, your tax returns, and we're going to underwrite those to make sure that they meet the guidelines and criteria and actually make sure you're pre-approved to purchase a house.
Okay. Where does the interest rate come into play?
The number one question I get, Phil, is what's your rates today? And that's the biggest misconception, because you can call up a lot of different companies or go online and you'll see a quoted rate. When in actuality, there are so many factors that go into determining what your interest rate is until we have a loan application, a property, know what kind of down payment you're going to put on there, and even see what the insurance is going to be. It's all going to affect your rate. So anything you see online or just get a quick quote, it's really not that accurate. Once again, my job is to make sure we correctly set your expectations throughout the process so it's not a daunting experience.
So James, you've told me a lot about the documentation that I need to supply for a mortgage. Can you tell me more about the process?
Absolutely. You remember when we did the pre-approval, we've already collected your income and asset documentation. We're going to package everything up along with the appraisal that's been ordered. If there were any repairs or anything that was renegotiated for, we're here to ensure those are done as well. But we're going to get all of that, get it in for final underwriting. And the underwriter is going to give us what's called a clear to close. At that time, we're going to issue a closing disclosure. And the closing disclosure is going to be the final numbers that you're going to see at the title company. You're going to get this at least 3 days prior to advance, so you'll know what my bottom dollar is, how much money I'm going to have to bring, and ensure there are no surprises. You'll review that with me, and then we'll set up a closing with the title company that Phil has already got lined up.
All right.
We'll go to closing then, sign a bunch of papers, fund the loan.
The term that I heard that I think is most important is clear to close.
Clear to close, it's a happy day because we've been through the process. We've already requested and received all the documentation, but that basically means we're ready to go.
Well, is there anything during this process that I need to avoid?
Yeah, and there's other things to be aware of too. So once your credit is pulled, believe it or not, there are companies that are alerted out there that you might be shopping for a home. You're getting all kinds of offers from Rooms to Go, Nebraska Furniture Mart, no interest for a year. Well, that stuff does pop up before closing, so don't go make any major purchases. Don't run up your credit card bills. If you need it that bad right now, call me so we can be proactive and not reactive.
Well, thank you very much, James. This has been very informative.
My pleasure.
Mortgage 101. We appreciate your time. We appreciate you watching, and we hope to see you again in the very near future.
Thank you.